Hi everyone, this is a quick tutorial of how to buy Treasury bills on Treasury Direct. I've also made a video of how to buy Treasury bills on Fidelity, which is on my channel. If you stay until the end, I'll explain why you may want to buy T-bills from Treasury Direct versus a brokerage like Fidelity. Let's go ahead and get started. Okay, we're on the Treasury Direct website homepage. If you don't have an account, you can just go to create a new account, apply now. You're likely going to be an individual in your Treasury Direct account. And then you just fill in your personal information here, like your first name, last name, social security number, as well as the bank information here. This is going to be the bank that you deposit and withdraw from Treasury Direct from. So let's say you've already created an account. You can just log in here by clicking Next. And then just go through the login flow. Treasury Direct will send you a one-time password, so just check your email for this information. And then finally, you land on your home screen for Treasury Direct. Here, we're under My Account. To buy Treasury bills, where you want to go is Buy Direct, so this tab here. In this tab, you can see that you can buy T-bills, which have a maturity of 1 year or less. You can buy Treasury notes, which have a maturity of 2 to 10 years, or you can buy Treasury bonds, which have a maturity of more than 10 years. So let's just look at Treasury bills for now. Submit. Now on this page, you can see a bunch of upcoming auctions for Treasury bills. So here we're buying new issue Treasury bills. You can see there are 4-week maturities, 8-week maturities, all the way up to 52-week maturities, meaning you invest now, you get paid interest and your principal at the end of 52 weeks. On Treasury Direct, you're buying new issue Treasury bills, which means every week there's an auction where investors submit bids to determine the coupon or rate of those Treasury bills. That's why for these auctions that have not yet come up, there's no rate that's actually shown here. However, what you can do is look at the most recent auctions. So if you scroll down, view recent auction results, here you can actually see the most recent 4-week auction. You can see this auction will have a T-bill that's issued on August 20th, and the investment rate is 5.355%. So it's a bit confusing because it shows a high rate and an investment rate. The difference between those two is the high rate is calculated off of a 360-day basis, which can be a little bit misleading. What you actually care about is the investment rate, which is on a 365-day basis. That's going to show you what the annual return of the T-bill is versus other investments. So if we go back, we can see here that over the course of a year, if you were able to earn this return, remember this is just a 4-week T-bill on a 365-day annualized basis, it returns a coupon of 5.355%. This is going to be the rate that you would compare versus a CD, for example, which also often quotes on an annualized basis. Now, one thing to pay attention to is this is the most recent auction. Most of the time, the upcoming auction will have a similar rate. Now, sometimes that might not be the case. For example, if the Fed is increasing or decreasing rates, this rate can actually move around. The best way to know the rate of the new issue option is actually to look at the current Treasury curve. You can see that on this website, which is USTreasuryYieldCurve.com. It shows, for example, the current 1-month rate, just based on how treasuries are trading in the market right now, which a lot of the times will determine what the auction result is. The current 1-month rate is about 5.5. You can also see from the Treasury yield curve that the Fed is expected to cut rates. So you can see the 1 year, for example, is closer to 4.5, which means the market expects the Fed to cut rates by about 1 percentage point over the course of the upcoming 12 months. Now let's come back to this page, which is where we can actually buy the upcoming Treasury bill new issues. For example, if we want to participate in the next auction date, an issue date of August 27th, that means your Treasury bill will be issued on August 27th and then mature 4 weeks or 28 days later. You just select this T-bill here, then scroll down, type in your purchase amount, so let's say $100. You can also choose to schedule reinvestment, meaning it automatically reinvests the proceeds from the 4-week T-bill into the next 4-week T-bill. This is similar to an auto roll feature, which you might have seen on brokerage accounts. So let's say we just want to automatically reinvest, and we want to reinvest for the next year, so 11 times. And then it's as simple as clicking submit, and you'll participate in the next new issue Treasury bill, and it should automatically reinvest, and you'll be able to participate in new issue auctions as those happen as well over the next 11 months. So the process of buying on Treasury Direct is fairly straightforward, as it is to buy T-bills on brokerage accounts. So the question then is, why buy on Treasury Direct versus buying on a brokerage like Fidelity? So there are a couple reasons you may want to do one versus the other. The first is when it comes to buying on Treasury Direct, you can buy amounts that are less than $1,000. For example, if you only want to buy $100 worth of new issue T-bills, you actually can't do that on a brokerage. The minimum amount that you can buy on a brokerage for most brokerages, such as Fidelity, Schwab, Vanguard, is $1,000. The second reason why you may prefer to buy on Treasury Direct is it does remove some brokerage default risk. What do I mean by that? For example, if Fidelity goes bankrupt, there's some insurance protection up to $500,000 of your brokerage account. However, if you're putting millions of dollars into Treasury bills, for example, that's not necessarily guaranteed to be safe in a brokerage account. That being said, I personally think the likelihood of Fidelity, Vanguard, Schwab, any of these large brokerages going bankrupt is very, very, very low. However, that is one consideration when considering whether to hold T-bills, which are generally a safe, low-risk investment in a brokerage account versus buying directly on Treasury Direct. Now, I should also present the other side, which is why not buy on Treasury Direct. And there are a couple pretty compelling reasons not to do it either. The first is Treasury Direct is kind of hard to track. It's not a very modern interface, and customer support is quite slow compared to any brokerage. Personally, I like to look at a lot of my investments in one place, and it's a little bit easier from a brokerage account where I also hold stock or bonds or other types of investments. The second reason you may not want to buy on Treasury Direct is typically you can't buy through your IRA or through your Roth on Treasury Direct. Why might you want to do this? Well, Treasury interest is taxed at ordinary income tax rates, which is higher than capital gains tax rates. So a lot of the times you may be better off holding these in tax advantaged accounts. For example, IRAs or Roths, where because of the tax deferral or the lack of taxes in the case of a Roth, you actually can put higher tax rate investments in these vehicles and take advantage of the fact that you're not paying taxes. So that's something that's doable within a brokerage, which has your retirement accounts, but not something that's doable on Treasury Direct. Finally, I typically don't recommend people sell their treasury bills, bonds. The reason for this is they're not necessarily the most liquid instruments, meaning sometimes you might have to sell at a discount. Also, if you're selling treasury bills or bonds, you are subject to interest rate risk, meaning if interest rates change, the price of your bond can go up or down. However, if you do need the cash from a treasury bond that you've purchased and you need it right away, it's a lot easier to sell that bond on a brokerage like Fidelity or Vanguard or Schwab versus it's a lengthier process if you're holding those bonds on Treasury Direct. So hopefully that's a helpful overview of how to buy on Treasury Direct and why you may want to buy on Treasury Direct. I also have a video on how to buy T-bills on Fidelity, which you can check out on my channel. And if you subscribe to my channel, I'm going to make videos on how to buy T-bills, T-bonds on every brokerage, including Schwab, E-Trade, and Vanguard. Talk to you guys next time. Bye. Thanks for listening in. I'm Nick, and I've worked in finance for almost a decade. If you enjoyed this video, please give it a like and follow our channel for future videos. You can check out our WeChat group for more wealth and retirement tips. Talk to you next time. Bye.